Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Thursday, March 19th, 2020, and got another rough day getting started probably here. Futures, a little volatile overnight, not as bad as they have been recently, but still not too good. And so we'll probably get off to another rough start. That's been a theme throughout this downtrend. We've seen a lot of movement to the downside, but instead of being locked limit to the downside right now, we've got Dow futures down about 260, S&P 37, NASDAQ 57. So at least maybe things have calmed down in the short term a little bit. But again, we'll talk about some of that in just a minute. Let's go ahead and go over the things that we want to talk about today. Going to go through yesterday's market recap. We'll get into talking technically. And here, what I really want to do is get into the OBV and the accumulation distribution. I've been talking about this a lot, and in fact, on a lot of my charts, I'm actually replacing RSI, which I tend to use as a momentum following indicator, and I'm replacing it with the accumulation distribution. I'll explain a little bit about that in just a couple minutes. Then we'll get into the earnings spotlight. I want to talk about one home builder. Really good report. Everything seemed good. Then we'll take a look at a chart. Complete opposite. So again, the technicals are telling us something different than what the fundamentals currently are telling us. Upgrades, downgrades, got a few of those we can go through, and then we will wrap up today's show with the three you must see. So three charts that I think you may want to take a look at. We'll just look at some relating to the scooters and the scooter reports. All right, let's go ahead and get started here. I want to go in and take a look at what we did yesterday. One theme, you can see we came well off the lows again yesterday. We did finish down quite a bit. Dow Jones down 6%, 1,300 points, closed below 20,000. That's the first time in quite a while that we've been that low. But we did finish below the 20,000 level, even though we did rally late in the day. S&P 500 down 5%, another 130 points. One positive here is that we went down below 2,300 intraday. If you remember, the December, the fourth quarter 2018 lows dealing with the trade war, that came in at about the 2,350 level on the S&P 500. I think that was the low close. I think intraday we might have gone as low as 2,346. Well, yesterday we went down below 2,300 intraday, so it looked like we were breaking down. Came back up. We did print a little hammer there on the S&P 500, although it doesn't look like that on the spider. We had a much bigger gap down. But the end result was we managed to hold on at 2,350. So at least for a day, we've held that 2,350 level. Today could be a different story. We'll see. We're probably going to be right back down there testing it early in the action. Today, NASDAQ lost 345 points, down 4.7%. Mid caps, though, and small caps, look at the beating that the mid small caps are taking. Twice the loss, more than twice the loss we saw on the NASDAQ, and roughly twice the loss we saw on the S&P 500. So mid caps and small caps really didn't get the bounce late in the session that we saw from the other key indices. So if you've got small caps, mid caps, these are stocks, in these areas that really are struggling on a relative basis. And if you don't have them, I'd probably stay away until they begin to show some consistent relative strength, because for whatever reason, and I guess you could argue it a lot of different ways, but for whatever reason, this is a group, an asset class, mid caps, small caps, that investors simply don't want to be a part of right now. Looking at the leadership, you can see that staples, healthcare, and utilities, three groups commonly mentioned as defensive, more defensive areas. Three of the top five groups, even though we did have that big recovery on the Dow, S&P, and NASDAQ, really not a whole lot of strength in the aggressive groups. We did see communication services and technology break in, but with a big rally coming back from those earlier lows, I would have felt better if we had seen more aggressive groups leading. But consumer staples has been the best area in the market for the last week. It wasn't just yesterday. It's been the best area the last week. It's also been the best area in the last month. So if you're going to be in consumer stocks, you really want the staples relative to discretionary, which has been much more of a laggard. All right, let's move to the 10-year Treasury yield, see what's going on here today. Right now, we are down 1.10%, 1.11, but we are down about 16 basis points from where we closed yesterday, which was up at that roughly 1.27 area. This has been a huge move. And, I was looking at the candlesticks here, and this is going to, I'll talking technically here in just a minute. But one of the things, when you see the 10-year Treasury yield going like this, if you pull up something like the TLT, you'll see the opposite. So instead of having gap downs in the yield followed by rising yields throughout the day, the Treasury prices themselves are gapping up with selling throughout the day. So if you look at this chart here over the last 8 days, even 9, we could go back to this one. It's a slightly filled candle, but especially the last 8 days, you can see some big gap ups and a lot of movement to the downside. So what's going on is we're seeing a lot of fear at the open. So everybody wants to jump into the TLT, but during the trading day, everybody's getting out of the TLT. And when we look at the equity market, the fear is driving the equity market down at the opening bell. And then we're seeing recovery. And I'm going to give you a couple of numbers here. And I've been talking about this a lot to our Earnings Beats members. And I think it's really, well, I don't know how important it is, but it's certainly stunning. The spider, let me pull up the spider chart for you. And in fact, before we get into this, let's go ahead. We'll just consider this all part of talking technically, because I want to talk about this. And I also want to talk about the accumulation distribution versus OBV and how I think it can help you in a market like this. So you've got a chart up now of the spider, the SPY, and you can see a lot of hollow candles. Filled candles mean that you are seeing a lot of selling from open to close. Hollow candles are telling you the opposite, that you're seeing more buying from open to close because you're closing above the open. Filled candles, you close below the open. Hollow candles, you close above the open. That's the key. So some of these red hollow candles, even like the one yesterday, we finished down for the day, but we finished above the open. So in other words, we took a big hit at the open, and then we rallied and got some of those losses back. And that's been a theme throughout a lot of this move in March to the downside. Let me just give you a couple numbers here. The spider back on February 21st, right in here, we were at 333.48. That was the close on February 21st, which was a Friday. The close yesterday was 240. We have dropped 93.48 points. At the open, on a net basis, we have dropped 94.48 points. All of the selling that's taken place on a net basis has been at the opening bell. The net during the day, the spider actually has gained 1 point. So in other words, if you had just been investing, getting in at the open right at 9:30, getting out at 4:30 or at 4 o'clock, so you don't hold overnight, you'd have been roughly flat on the spider. And if I change this and I put in the QQQ, and you take a look at these candles right here, I went back and did the exact same exercise. And the QQQ back on February 21st, right back up here, was at 230.27. Since then, we've dropped to 176.60 at the close yesterday. That is a 53.67 point drop, 53.67. You know what the gap downs have been on a net basis on the QQQ? 64.14. So the QQQ has been down 53 points, but it's been down 64 on a net basis at the open, if we add up all the opens since February 21st. It's actually, the QQQ has actually gone up 10 points during the day. So if you add all of the points that you gained on these hollow candles from open to close and subtracted the red filled candles since February 21st, and since and I haven't done this, but if I updated it since the last trading day in February, the numbers would probably be really staggering, like probably twice as much to the downside on the gaps, and then recovery of half of that during the day. That's what all these big hollow candles are telling us. So what do you do with that? I'm not quite sure. I mean, again, it doesn't change the fact that if you were in the QQQ back on February 21st, you still lost a lot of money in your account. But to give you a little bit of a historical perspective, back in 2008, on the Spider, we had a 25% drop, and about 70% of it came during the day. 30% of it came at the open. So I guess my point is, how do we know how much is really being sold? We know there's a lot being sold, but it's all coming at the open. And I guess my bigger point here is, how are institutions getting out? I mean, if you've got millions of shares to get out, you can't put a market order in at the open, or maybe you can. Maybe that's why we're getting the huge gap downs. Maybe, maybe there are institutions that are saying, you know what, we'll never be able to get out during the day. Let's just bite the bullet. And maybe more and more of them are doing it. I don't know. It just seems very odd to me that, as fearful as this market is, and as much as we've gone down, that we don't go down on a net basis during the day. And yesterday was just another example of that, coming up into the close. Anyway, that was just food for thought. Now, I want you to look at the accumulation distribution here on the QQQ. And we're going to come back to this in just a second, but you can see the accumulation distribution went down initially. You can see all these red candles. The accumulation distribution is kind of one technical indicator that helps us view kind of the exercise I did on my Excel spreadsheet. But let's talk a little bit about accumulation distribution and OBV so you have an idea. If you go into the Chart School article, I think that Arthur Hill wrote this when he wrote just about everything in there. Did a fantastic job. This is a great analysis of accumulation distribution. If you scroll down, number one, you'll see the formulas and some examples. But then also down toward the bottom here, you can see accumulation distribution versus OBV. And he gives you an example of how to interpret the two of them. But I'll try to give you a crash course real quick. First of all, on the accumulation distribution, this was developed by Mark Chaikin. Many of you probably have listened to him or do listen to him from time to time here at StockCharts. We've had him on our shows in the past. I think it's a brilliant indicator. But it's a volume-based indicator, and you can see this. I'm just kind of reading this. Volume-based indicator designed to measure the cumulative flow of money into and out of a security. And when you go down this last line, chartists can use this indicator to affirm a security's underlying trend or anticipate reversals when the indicator diverges from the security price. So when you got the security price going down and the accumulation distribution going up, it's an indication that you've got a positive or a negative divergence, depending on which way it's working. But it can signal, not that it's going to guarantee to signal, but it can signal a reversal, or it can anticipate a reversal. And that's what interests me when I'm looking at what's taking place in the market right now. Now, the calculation, when you go through, forget about all this. Let me just tell you how it works. You can get a +1 or a -1 reading. If you close at the high of the day's candle, you're going to have a +1. If you close at the bottom of that candle, you're going to have a -1. Anywhere in between, and you're going to, if you're in the middle of the candle, it's going to be basically a 0, or actually maybe it's 0.5. Let me go back and see how. Yeah, I think it actually moves back towards 0, and then so if it's 50-50, it's like a 0. All right, so if you finish right in the middle of a bar, then that volume is not really treated. It's not going to be, you're not going to go up or down on the AD. If you have and look at this candle that's highlighted here. This is research in motion. Obviously, it's an old chart back in 2011. But you see how we had this huge move up intraday, and we came back down and closed here. Now, do you see we actually went up for the day, but we were at the bottom at the end of the day. So the multiplier was a -0.97. And what you do is you take that multiplier times the volume that day. And so the volume would be a negative, and your accumulation distribution goes down. See how that goes down there? Even though the price went up from close to close. Because throughout the day, think of the accumulation distribution as what's happening during the day. And look at the OBV as really what happened from yesterday's close to today's close. Because this would be a very strong positive for the OBV because you got good volume and you finished higher. Doesn't matter how much higher, doesn't matter whether you finished near the low of the day, you finished higher. So it's a very simple calculation. So when you come down here and you look at the two, and this is a good example on Clorox, you've got in the pink line down here is accumulation distribution, and this black line is the on balance volume. And both of these are designed to kind of give you an idea of what's going on in terms of the trend with the volume and so forth, accumulation distribution. But look at them, they're giving you completely opposite sides or signs. And so you have to decide which one of these makes more sense to you. Now on Clorox, on this particular candle, do you see the huge gap down? And do you see the massive volume? Well, for OBV, or excuse me, for accumulation distribution purposes, we closed near the high of the range. So we're going to probably get, I don't know, maybe a 0.85 multiplier. And so accumulation distribution is going to take 0.85, going to multiply it times 7 million, and it's going to add that volume. This is just a cumulative volume number. The OBV, because you finished down, yesterday's close to today's close is down, period, end of story. It's down, take the entire volume and subtract it. That's how you get these divergences between the two. Now, let's say that this occurred up here at 62.68. And so we were down, I don't know, maybe we were down 2 pennies for the day. We had 7 million shares, had this huge move to the downside, came all the way back up, lost 2 pennies. It doesn't make sense to me that we would take on OBV all of this volume and make it negative. To me, that's a much more bullish day than it is a bearish day. And so that's the reason why, for me, I prefer accumulation distribution. I actually like it when the two go together, like they do here. I think they're telling us the same thing. So it's confirming the other signal. But when they diverge, I actually prefer accumulation distribution. And you can look at it however fits your eye and the way you approach the market. But when you go down, a lot of times you see accumulation. And so if you do finish at the high of the day and you've got this kind of volume, it's telling me that there were a lot of buyers at that after the opening gap and all the panic. We had a big reversal. Somebody was buying all these shares and coming back up, getting close to the high of the day. So I treat that much more bullishly, even though we're down. And so when I look at the overall market, we're seeing a lot of this where, we're down day after day after day, but we're getting these reversals and finishing up near the upper end of the candles. And as a result, you can see the accumulation distribution. I'm going to show you another chart here. And this is Bank of America. Now, I know the banks have been getting absolutely hammered, but look at all these hollow candles in the last 8 trading days. And look at what the OBV is doing. So we've continued moving down rapidly. Here we moved down, and you can see red candles, filled candles. So we were moving down. But since we hit this low, the price action has gone down. We've lost probably about another 30% on Bank of America. But while the price has gone down 30%, accumulation distribution's gone up. And interpreting this, I'm not quite sure exactly how to interpret it, but based on the reason that Mark Chaikin, I'm sure, developed this indicator was to try and look at something besides just price action, to give us some clues as to what's going on in the market. Now, I would look at this, and my interpretation is that Bank of America is being accumulated, even though it's being sold off heavily, and there's a lot of fear, and banks are getting killed. And if I pull this up on my relative chart, look at Bank of America relative to its banking peers. So relative strength is going off the charts. Now, it's not performing very well versus the S&P 500 because banks in general are getting hammered. But Bank of America seems to be one of the leaders. The market is anointing Bank of America one of the leaders. And I'm seeing, not on this chart, but if we go back to the other one, I'm seeing that accumulation distribution moving higher. We're now at about a 2 or 3 month high, even though prices are down more than a third. I find it pretty interesting. So I wanted to just kind of pass that along. And so a lot of my charts now, this is my default chart. I've replaced RSI with accumulation distribution. Because RSI, what I like about RSI, and I'll go down here and just show you this chart on an RSI. some technical indicators just don't work for me in different market environments. Yeah, we're incredibly oversold and we've gone nowhere. It's done nothing. So if I bought Bank of America when it became oversold back here at the end of February, when it was 32, it stayed oversold throughout this entire period. I would have lost a lot of money. What I use the RSI for is when we're trending higher and we get pullbacks. So if we're trending higher, we get like this, we move up, we pull back here, the RSI comes down to about 40. Here we're moving up, we sideways consolidate a bit, and here we can see the RSI gets down, maybe into the 50s. I kind of use that 40-50 zone as an area to maybe think about buying during an uptrend. When you get a pullback or you get consolidation. I'm not somebody who likes to catch a falling knife. And when you see RSIs down here, that's what you're doing with stocks. So I need something more than just an indicator that says I'm oversold, because almost the entire market looks like this right now. And it's been looking like this. So I need something that gives me a little bit more confidence. I think the accumulation distribution does that, because it does tell me that based on how the stock's finishing, there's a lot of volume here. So obviously there's a lot of selling, but there's also a lot of buying. You don't get these rallies unless there's some buying taking place. Somebody's buying these shares. And the accumulation distribution is kind of the indicator that shows us that. All right, let's move on to earnings. And I don't want to spend too much time here, but I do want to point out Lennar. And Lennar, I was going through their numbers. They crushed top line, $4.5 billion versus $4.13 billion. Revenue's not even close. Bottom line, $1.27 versus 83 cents. Not even close. They, went into all of their bookings, new home bookings, everything that they talked about, orders, everything that they talked about was higher than last year. And look at the chart. Look at what's going on in the chart. This, unfortunately, those who don't follow technical analysis and don't follow price action, look at their report and, been holding Lennar and say, well, their numbers are going to be good. Their numbers were good. And if we come back over here, I'm just going to show you today's quote right now. Lennar's flat. Had what I thought was a really good report, and it's down a penny. So the lesson here, I think, is just technicals, and this is what we all at StockCharts talk about. Technicals precede fundamentals. Price action tells you many times ahead of fundamental news coming out. I can promise you, looking at this chart, that Lennar's next quarter numbers aren't going to look like last quarter's numbers. And that's why we're seeing all the selling. Look at the home building group as a whole. We were over 1,100 1 month ago. Yesterday, we hit a low of 448. Now, I mean, there are a lot of other groups out there getting hit hard too, but home builders are up there with all of them. And this is with record low interest rates. So this is telling us something about the economy going forward, that, we've got a new, and you might say, well, my gosh, I better get out of the market. Well, a lot of that's been priced in or is being priced in to the market right now. So, if I held all the way to this point, I'm probably going to continue to hold. But if I hadn't held, I'd be waiting for some stabilization and see a base and, start to see a little momentum back to the upside before I'd be interested here. Upgrades and downgrades. I'm going to first go over, let's pull up BAX. And I'm going to do this on a relative chart. So this is Baxter. This is in medical supplies, and some of the healthcare have held up pretty well. Look at all these hollow candles. So medical supplies going down. Baxter actually breaking out on a relative basis. It's actually been a pretty good performer. And if I go back to my default and look at the accumulation distribution, look at it breaking out the new highs. Does that mean that this stock's going to go higher? I can't tell you that, but what I can tell you is that it's wildly outperforming its peers. And if we go back to that chart again, you can see that it's also wildly outperforming the S&P 500. So while the fear is driving a lot of stocks like Baxter down at the open, you can see there are a lot of folks buying Baxter after the open. And that's a sign of a pretty good stock. Or at least, if I'm trying to have some confidence with trading something in the market on the long side, I'm going to need to see stocks that I feel are being accumulated and are showing relative strength. I mean, I always talk about relative strength and earnings. Right now, I think you can throw earnings right out the window. I mean, I went through and TCOM, FIVE, Williams Sonoma, all suspending or withdrawing guidance. I saw Zoomies withdraw guidance. TLRD refrains from providing guidance. Guess not providing guidance. Steve Madden, which is SHOO, SHOO, withdraws guidance. Diamond Rock Hospitality, DRH, withdraws guidance. Estee Lauder, withdrawing guidance. Marriott withdraws guidance. This is every day now. We're getting many. I mean, I'm just reading you a few of these. There are a lot of them out there. A lot of these companies are withdrawing their guidance going forward. So I think you got to be really careful with the ones that are underperforming. And if I was going to trade, I really would try to stick with ones where you see that accumulation distribution holding up pretty well, not moving to new lows. If you pull up the airlines, let me just give you this last one. In fact, let's go ahead and make this our first of the 3 you must see. So let's move into the 3 you must see. And I'm just going to give you an airline on a default. And I want you to take a look at this accumulation distribution. So here we're down closer to the lows. There's probably others that are a lot better than this one. Let me see what DAL will be our first 3 you must see. But look at UAL. See the difference? This one's selling off just like a lot of the other stocks, but the accumulation distribution is going down with it. Not only are we getting selling at the open, but we're seeing it throughout the entire day. That's not what we're seeing in the overall market, but it is what we're seeing in some areas of the market. You know, you see UAL. How about, all right, so DAL was our first of the 3 you must see. Let's do another one of these. Let's do cruise lines. How about NCLH, Norwegian Cruise Lines? This one's down. You see a lot of hollow candles here? I don't. In fact, whenever we get gap ups, we get black candles, which means we gap up and then we sell and close below the open. We've had 1, 2 hollow candles over the past month. This is what I call selling. And look at the accumulation distribution. You see the difference between that and what I was talking about earlier with some of these other stocks? Yeah, I'm not sure exactly what it's going to mean down the road, but what this tells me here is this is selling. I think what we're seeing in the airlines is selling. I think what we're seeing in the home builders is selling. I think some of these other areas, like in the healthcare, consumer staples, when we get the big move down at the open with everything else, we get buying. That's where the money's going. So money coming out of treasuries, that's what's been sending the yield higher. Where's it been going? At the open, it's you know, if you look at the TLT, the selling, look at the accumulation distribution. And in fact, let's just go ahead and make this one our final 3 you must see. So kind of off the cuff today. But look at the TLT, the difference. You see how we kept going higher and the accumulation distribution was going lower? And then when we did start to see real selling, we had some gap ups in here, a couple black candles. Most of these are filled candles, 1 hollow candle in the last couple weeks. So we're getting gap ups in the TLT, gap downs in stock. And then after the open, we're seeing selling of treasuries. That money that's coming out of treasuries is not going into airlines. It's not going into home builders. It's going into consumer staples, healthcare, areas like that. And so if you're going to trade, you know, my suggestion is that you really think about trading areas that are showing strength, relative strength, and also areas that are showing positive accumulation distribution. I think that can make a really big difference in your trading. But I'm sure I'll be talking about this a lot more as we get into future shows. This is my last show of this week, though. We'll be back on Monday at Earnings Beats, Tuesday right here at StockCharts. Everybody have a great day. Happy trading.